The pace at which Cardano is improving the technology of the blockchain is quite incredible. And so I want to go over that in this video, plus how that ties into the current valuation and the valuation of ADA throughout this bear market, because we have to compare and contrast Cardano with other ecosystems that are also advancing and scaling up their blockchains. As we know, the Vasil hard fork is coming in the next few weeks, and that is a massive upgrade for scalability. And towards the end of this video, I'm going to look at some of the possible applications that will add users, because really, look, technology is going to congregate around essentially low fees and easy to use, and it's going to become easier and cheaper as time goes on. So the thing that is going to differentiate blockchains is how good are your applications and how many people are using your blockchain. That's what's going to create value over the long term, not technology, because technology is going to get better on every chain. So what is attracting users? So I want to look at that towards the end of this video. Firstly, let's look at how many users are on Cardano now and how things are actually growing. You can see that the number of ADA wallets is going in the right direction, up around 3.5 million now. So it's growing very fast. And you can see the amount of transactions and payments per day. I'll just get rid of myself down in the bottom right. Around 80,000 to 100,000 transactions a day. But payments, that's the thing to look for really. Around 200,000, maybe 250,000, something like that. Now remember that Cardano is an EUTXO blockchain, meaning that one payment or one transaction can have multiple payments in it, because you can press send and that one send can have 5, 6, 7, 10 different payments going in different, to different addresses. So that's payments, but obviously Cardano is a smart contracts chain as well, which is why they are having to upgrade it to have more throughput. You can see that there's nothing wrong with the average blockchain load right now. So what I want to keep an eye on right here is the amount of daily transactions. So we're going to have a look at that, transactions per day. And what you can see here is from, we're actually going to go back to a previous date, because you really need to see how this kind of changes over time, right? So the total number of transactions, going in the right direction. But what we can see here is daily active addresses during this bear market really coming down. So it's important to compare and contrast this to other chains that are, the competition for Cardano. So we're looking at maybe 100,000 daily active users right now, around that amount, and it's come down from the peak, which is during the bull market you just have people speculating and opening up new wallets and buying JPEGs and stuff. So that's come down to around 80,000, 90,000, call it 100,000 active addresses per day, for a top 10 blockchain. It's good to compare that to the competition, which Cardano is putting itself up against. For example, Ethereum and Polygon, which are really amongst the most used blockchain networks right now. So you can see Ethereum is still around, let's call it 400,000 or 500,000 daily active addresses. So, multiples of Cardano, and it's actually not gone down as much as Cardano. Now, the reason for this is because Ethereum just has a much more mature ecosystem full of applications that have yet to launch on Cardano, but are doing so in the second half of this year. So dependent on what part of the growth phase that you want to be in, Ethereum just has more use cases right now, but then we're looking at Polygon Matic as well, around 250,000 a day. So Cardano is, from an active user standpoint, below these chains, right? And Polygon, this is the Polygon proof of stake chain, around 250,000 daily active users. Something like Arbitrum, which is another layer 2 network on Ethereum. So, that's being ported over to Uniswap and Aave. So some big applications that are using this, you're looking at around 100,000 users a day for that. So Cardano is up there, but certainly, it just doesn't have as many users. And there are reasons for that. For example, the fact that really the only things you can do on Cardano right now are, buy some JPEGs and exchange some tokens. But a lot of the lending protocols and the kind of yield that you can get from different apps, that hasn't launched yet, but that will be launching in the second half of this year. The reason why I look at daily active users and the growth in them is because, in my opinion, that's really the king of all metrics. Technology is great, but if there aren't any users, a blockchain is going to be worthless, because at the end of the day, if we just look at Bitcoin as being the only real store of value here, and then everything else is essentially, especially the smart contract chains, they're a platform that charges fees to users and then takes those fees and passes them back to people that are investing as staking rewards, right? And so the yield that you get is essentially going to be the proxy of the valuation of that token, right? Because what you need is more demand for that token over time and fees to be paid in it and then passed back to you as an investor who is staking your coins. other than that, there's no real fundamental value in a store of value asset because Bitcoin exists. And so it will always have that crown. And so what you're looking at is we need more users and use cases, and we need more people to pay fees on the blockchain. You're seeing Ethereum, a lot of interest in that as they move over and start bringing staking rewards back to investors and using some fees to buy back tokens to reduce the issuance down to at or near zero or even negative. Now, Cardano charging fees again. So what use cases are there? You need fees and you need that yield so that investors can give some sort of fundamental value to these things. And is there a value as well as a currency asset? Yes, there is. These aren't just equities, but there is a valuation there that people put their money in as a kind of base layer token and security for the network. So there is value there in that. But I think over time, we're talking decades here, the ones that charge most in fees or are able to charge the most in fees and pass some of that back to investors should, from a logical standpoint, retain more value and gain more value over time. And so, that's what I'm looking at. Now, one of the things that you're going to want to do as a smart contracts chain is basically make it easy for people to use it. One of the upgrades that we're seeing from input-output recently this week is something called Babel fees or Babel fees. And this is a way to pay fees in a token that isn't ADA. So just to clarify here, Cardano ADA will always and forever be the base asset that fees are always paid in, but users further up the stack might not want to have any ADA. They might not want to buy ADA to invest in it. They may be unhappy with the volatility of that asset. And so for many reasons, they may just not have any ADA in their wallet. For example, if there's a game that someone's playing and they download it and they don't really even know that it's on Cardano, then how can they pay fees? Well, they're going to want to pay fees in the assets that they have in that application. Now, in this example from IOHK, they're using an in-game token and actually NFTs, which come in the form of swords in this example, and then game coins. Now, what this essentially does is create a fee market where someone can just say, I'm going to pay the fee in some other type of asset. And then this works through a system of other users who are happy to accept that value, and also validators who, what essentially they do is put up the ADA as a fee and then get the other asset which has value. And I'm assuming that there's going to be some, decentralized marketplace where, these assets are actually valued. And so you can take that value and sell it or trade it for, the amount of ADA. So really, fees are always paid in ADA, but what this mechanism is going to do is allow people further up the stack to basically pay in any other value that has an open market. So that's clever, and it's obviously going to kind of take ADA out of the system, which is actually a benefit, I think, because essentially up the stack, we want people to use Cardano without really even knowing that they're using Cardano, and that's going to make things much more seamless and help integrate the blockchain a lot more. Something else the ecosystem is working on right now is from Orbis project. Now, Orbis are building a layer 2 on top of Cardano. Now, if you're part of the crypto investor course, I've gone over this a lot, which is how blockchains are changing. I'll leave the link to the crypto investor course in the description. I update that every so often for free for existing users, so go and check that out. It has updates about what blockchains are actually doing and the outlook for them. And Ethereum's doing this very thing, which is taking away the monolithic type chain and moving into modular chains. These are kind of buzzwords that are happening, but essentially you want to split up different parts of the blockchain. So you have data availability and consensus mechanisms. That really has to be one separate thing. You have settlement layers, and then you have execution layers on top, which is layer 2. Now, Orbis projects are trying to build a layer 2 eventually on top of Cardano, which really is going to reduce fees. So rather than using the base layer, obviously it's expected that Cardano is going to grow to be large enough where you need a layer 2 network which batches transactions up and then sends them all down to basically reduce fees. Now, these are all the same things that we're looking at on Ethereum in terms of data availability and roll-ups and everything, ZK roll-ups as well. So this is coming to Cardano as well. So as you can see what I said earlier in the video, all of this technology is just going to converge into, you know, everything's going to be cheap and effective and efficient in the end. And so what is the actual value of a blockchain? Well, it's the applications, right? So definitely check out Orbis, because that's what they're building on top of Cardano. So Cardano has enough scale. It has plenty of scale. You can see only 50% scale is being used right now. So there's plenty of scale right here. But what we really want to look for is what applications are being built, because that's going to drive more users. Only for me, users really are the value, right? Without users, how can the base asset have any value? So one of the projects that has recently come out with something that they're building is LiqwidX. I don't have any links to this project, but this is an interesting project. So think of Aave on Ethereum. So it's a lending protocol where people can put their ADA and then borrow dollars against it, or that it will be their own token, which is LQUSD. So it's going to be a stable coin. So what you can see here is that loans are denominated in LQUSD, which is a USD pegged stablecoin, and are required to maintain a minimum collateral value of 110%. So think about, you know, people that have Cardano ADA and they want to borrow dollars against it. So they put their dollars onto the system and then obviously pay a fee to borrow dollars. Now, something that's slightly irritating here is that they say that users are able to generate interest-free over collateralized loans. Now, interest-free is a very frustrating term to see, because nothing is interest-free, right? Nothing on this planet is interest-free, but they're saying that it's interest-free. If you actually read through, essentially what they're doing is just charging you a fee, an upfront fee per time that you interact, rather than an interest rate that is variable over the time of your loan. So it's a different situation. I don't think they should be calling it interest-free, because that's not what it is. So the way that the system works is that when you actually go and put the collateral on and borrow the funds, it will charge you a flat fee representative of how the supply and demand on that application works at the time. So I don't think they should be calling this interest-free, because that is not correct, right? Everyone has to pay a fee to borrow money, whether it's paid in an upfront fee when you actually deposit and withdraw, or whether it's a variable interest over that time, it's still a fee that you have to pay. But now this is just one application. I'm not saying this will work or not, or how successful it will be, but these really are the things that are going to drive value for me for Cardano, is actually people using these, because you can see that on Ethereum and Polygon as well, who are integrated with the biggest applications like Uniswap and Aave. Users doing things creates value, and just coming out with technology is the basis for that value, of course, but you need the users there to actually follow through, and that creates more demand for ADA in general. There's a lot of applications that are waiting for the Vasil hard fork to actually launch, and that's going to be happening in the next few weeks. I'll be making some updates for Crypto Investor Course members about this, and some of the applications that they might want to look at, and some of the use cases for that as well. So definitely check out that in the description if you want to be kept up to date. I'm James, it's MoneyZG. Cheers for watching, and I'll see you in the next one.